Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets. What a week it is to recap. Last Friday, just the day after our last show posted, Chairman Powell of the Federal Reserve kind of punched the markets in the face, and it wasn't just the equities markets, it was all markets. So we've had quite a bit of volatility just from those comments and the Fed doubling down on the intention to continue raising rates. And Robert, why don't we just get into gold, silver, platinum, the impact it's had there, but currency-wise and other markets. What have you seen transpire just in 4 trading days?
Yeah, it's been a lot. You mentioned Powell's comments, and seems like they want to continue with a hawkish tone. And we've talked about this a few times on the show in the last few months, is like the market anticipating maybe a change of pace with the Fed raising interest rates. And, are they going to pivot? That's like the key term that the market expects. What if they don't? There's been these weaponizations of government institutions against things that is obviously evident. If you just look at some of the headlines, what if they do somewhat use the Fed as a weaponization against the economy? Some of the policies reducing the oil dependence and trying to go green and all that, that is killing the economies. That's hurting normal people.
Global economies.
Globally. And is that same trend going to be applied to what the Federal Reserve does? Do they just not even pivot? The market wants them to pivot, obviously, but what if they don't? What if they just keep being hawkish and they keep raising interest rates? Does that continue to drive the dollar higher? Does that continue to make the economies weaker and weaker? Is the point to hurt the economy? Because it sure seems that way.
You're right. When something isn't really making sense with the way that logic would have you believe, then you have to ponder and wonder, is it intentional? And if it's intentional, then to what end? Now, if it were just the U.S. economy, then I would say, well, yeah, I think that they'll pivot. And we've stated that, like they're going to have to pivot. You're seeing employment get really strained. You're obviously technically in a recession, even though they want to deny it. So we're already in a recession. Right? You've seen commodities peak.
How do you define that, by the way?
Yeah, that's right. You've seen commodities peak. And in fact, the Bloomberg Commodity Index had its biggest daily drop since July 12th yesterday. Everything at the end of this month is getting crushed. Copper, coffee, cattle. We'll get into the metals here in a little bit. So you're having success. So why continue to do it? Because just like they overshot with allowing inflation to run, they're now overshooting with the suppression of the economy. Well, here's what I think is happening. Look at Europe. Their inflation is way worse than ours. And I'm wondering if this isn't trying to have some sort of impact globally on slowing down the entire global economy. And you can't do that without significantly stifling our economy here at home.
The World Economic Forum agenda is not even being hidden anymore. So if people aren't aware of what that agenda is it is to kind of take over a number of economies. And so that's where I come up with, is the Fed just not even going to fake a pivot?
Yeah.
Are they going to be using these interest rates rise to just continue to crush the economy, to have some powers, globalist powers, come in and take over certain places? It's a big topic to cover, and so we'll leave it at that, I guess, and jump into the market. I think the biggest news is the dollar staying up there at the 108, 109 range, which is keeping the metals prices lower, just continuing to suppress prices in metals in dollars. Because today we see the lowest number on the price of silver since July 2020. That's a big deal. You mentioned the other commodities markets, the other materials are coming way down. So that's happening. Where does it turn? We don't know, frankly. Silver's at a new low, relatively speaking. It's like a 2-year low today, just under 18 on spot price. Gold's not yet at a new low. That 1680 level has been tested 4 times, and it looks like we're going to try to test it again here. Mm-hmm. There's been talk of maybe slightly lower lows, which wouldn't be surprising. It's a market. It can do anything. But the dollar index being up there at 108, 109, what's interesting to see, you have silver at a new low today, but the dollar index is not at a new high. It's just kind of chopping around there.
Great point.
And we've got, 3 weeks out until the next potential interest rate rise. The European rates are super low. So there's pressure on other central banks with what the Fed's doing, pressure on those other central banks to raise their rates.
Yes.
If they start to do that and they get in lockstep, and maybe if the Fed did back off to 50 basis points in a few weeks or something like that, if they're cooling their rate rises and maybe Europeans rise theirs a little bit. Maybe you do see a little bit of a major shift in the dollar index, but that has been very strong headwinds for gold, silver, platinum. Platinum's almost at a new relative low. So we're going to be watching this closely over the next few weeks, and then come, what is it, September 20th, 21st, something like that, with the next federal rate hike expected. We'll see. But yeah, you're able to buy silver cheaper than you have been in 2 years.
Yeah, and who hikes first? The European Central Bank's Mueller did say that a 75 basis point rate hike is needed. So as the weeks progress here, the European Central Bank's responding because the German inflation's up 8.8% in July alone. And think about that. And their energy prices are up tenfold from a year ago. So imagine your energy bills going from $250 a month to $2,500 a month. You talk about budget crushing. And I have to come back around to kind of what you said earlier. And we can't really let it go because everything's linked, right? Taxes.
That's right.
If taxes go up or more is squeezed out of the taxpayer, either through debt or spending or tax obligations or literally just pursuit of owed taxes, that really squeezes the average consumer, spender, citizen, if you will. But so do inflationary pressures, like prices rising. So do declining wages. All of this is like a perfect storm of not just an economic recession, but a real pinch. And we're already losing privacy. We know that gold checks that box in terms of an asset off the books, in a sense. But in terms of everything else, it's all out there and exposed. And Powell's had a significant impact on all markets. I mean, just from Friday when he spoke, gold's down 2.5%, silver's down 5% from our recording. And that means the gold to silver ratio now is at 95-1, by the way, which that's the one positive takeaway. You said silver's at the best value in 2 years. The ratio's at the best value in 2 years.
That's exactly
also.
right.
Yeah. So
Direct
double whammy.
correspondence.
Yeah, it's a good thing. But you've also got all commodities getting hit. But the Dow down 5.5% from Friday. The S&P 500 down 6%. The NASDAQ down 6.6%. This is in 4 trading days. Not good. And at the same time, you're watching Treasury yields climb. Last week, we went into this tug-of-war effect between the bulls and the bears on the gold price. Well, we didn't even talk about Treasury yields, and the 2 years at 3.45%. That's the highest since November 2007, and the Fed is not pivoting.
Yeah, so silver, lowest it's been in 2 years. Gold to silver ratio, highest it's been in 2 years. If we back up 2 years and like 3 months, that gold silver ratio went to as high as like 125, almost 130. That's the highest ratio I think that the gold silver ratio has been ever in human history.
Yes.
So let that sink in for a minute. That was in March 2020, I believe. And so 95-1, if you took out the COVID thing where gold silver ratio went to 125, and that was the highest ratio we'd ever seen in history. If you take that out, and you were to say, okay, you're at a 95-1 ratio, what do? Well, you buy silver. There are guys here who've been here 20, 30 years, 40 years even with McIlvaney, and they would be begging to buy silver at even like an 85, 90-1 ratio. So here we are at 95. We want to illustrate a few things that we've been able to do for clients over the last, 2 years, 3 months, 2.5 years.
Incredible.
We've had trades where clients are netting 40, 50, 60% total ounces, like in total increase in their total ounces of gold or silver. That's happened. Usually it might take a longer time frame. It might take an average of maybe 3 years or 4 years for that ratio to move where we get a trade from silver to gold or vice versa. But just here in the last 2 years, Dory, we have some really happy clients who have taken advantage of this. I have some that went all silver when the ratio was above 100, and then it came right back down to 65-1. 65-1 is the 40, 50-year average of the gold-silver ratio. That's a trade, and we executed those. Clients ended up with more ounces. Here we are back at 95-1. You're able to go back into silver in preparation to go back into gold. So we don't just talk about this stuff on the show. We're actually executing trades, increasing ounces of silver when the ratio is high, decreasing silver and adding to the gold side when the ratio is low, and we have some happy clients. I think that if we continue to get that type of volatility in the ratio and swings, it only takes a couple trades to really increase your ounces. But if you get 3 or 4 or 5 That's incredible to see those net numbers. I think my highest personally with one of my clients was just barely over 80% increase in ounces. And that's after buying the physical metals, which cost more than buying an ETF.
Yeah, that's net to the client. That's net of all
increase.
Expenses and everything else.
So if you haven't done that, if you don't have an IRA, or if you're just curious about how this works, it's pretty simple, but we can help guide you with that because there's certain places where the ratios turn around. It's hard to tell when the ratio gets so far away from the average like it is right now, the average being 65-1, we're at 95-1. Where does that reverse and go back towards 61? Where does it regress toward the mean? That's the tougher part to say, I think.
The timing.
Right.
Yes.
So 95, does it go to 105? Does it go back to 125? We don't know. But at 95, even still from 95 back down to 65 is a trade.
Yeah, we don't expect to be doing one a year, I think is your point, right? Like we have in 2020, 21, and now 2022.
Right.
And that's on top of premiums.
That's right.
Right. So we've also had multiple products that have had premiums run where we've been able to do a premium swap. So you've got the ratio trade where you're swapping from one metal to another. Now we have premium plays where you're staying within the metal, but you're getting out at a high premium into a low premium product. And this week we're picking up 25, 30% more ounces on premiums. So as dejected as you may feel with the spot price, you got to take your eyes off that. Okay, keep your eyes on the dollar for sure. In fact, I'm going to throw up this chart just to encourage you. This is a great chart just in terms of what's transpired since March between gold and the US dollar. You'll see they're a mirror image of each other. That aside, if you get lost in the weeds of the spot price, you're focused on the wrong thing. Look at ratio, look at value, look at premiums, look at the opportunity, look at the underlying fundamentals and what's going to come down the road. In order to buy a hedge on the dollar, which everybody's looking for a hedge on the dollar because it's a dying currency like the other fiat currencies, you got to do that when the dollar's up or the dollar is inflated and the hedge is depreciated or deflated. Well, the hedge is gold. So you've got the gold price down, the dollar price at a 21-year high. This is when you buy a hedge. And what we're saying is silver's even better. It represents future gold.
Yeah, future, like more. Future more gold.
That's right.
I mean, arbitrage is what essentially you're doing with the premiums on certain products in silver and being able to sell at a high premium and buy something at a low premium. Arbitrage is beautiful when you get something like that and you can net a gain just going from one of the same item to another of the same item. And so that's one thing you can do. You can do that even outside of your IRA in certain times.
Oh, yeah.
With certain coins.
With even a tax benefit.
With a tax benefit, selling at an actual dollar loss and rolling into more ounces or a better product. So there are other things that you can do besides just make money in gold and silver with the price going up. I think over time, if you were to fast forward a year or two from now, especially probably 4 or 5 years from now, I got to say, you're probably going to be looking at higher metals prices. So I think the dollar price of the metals is going to take care of itself over time. But when we're able to change from one product to another, whether it's in the same metal or from one metal to another metal and gain ounces, clients end up pretty happy with that, I'd say.
I would too. We can speak to it this
Done
week,
it myself.
This year, 3 years in a row. There you go.
Just did it last week with the same type of arbitrage situation with silver. So that does it this week for Golden Rule Radio. You can follow us on Twitter at ICA Gold, like us on Facebook, McIlvany Financial. Hit the subscribe button below, give us a like. And our website, McIlvany.com, we have a number of resources there. Or give us a call and we can talk to you about your own portfolio. Number here is 800-525-9556. Thanks for listening. Have a great week.